Brought to you by Patriots Helping Patriots.com.
Inflation Nation, boy, do we know it. The price of corn rising after spring flooding and summer droughts led to a smaller than expected harvest. And my next guest says because corn is used in everything from everyday foods to animal feed, this will drive up retail food prices across the board. Vice President of Operations at MacArthur's Bakery, David MacArthur, joins us. Pleased to have you, David. I feel like food prices have already been rising, and it seems like they're going to rise even higher. What's going on? What are you seeing, especially with these corn prices?
Well, you're certainly not imagining it. We've seen across the boards July of 10 to July of 11, right at a 10% increase in across the board cost increase that we've had to pass on to consumers. And right now, USDA is talking about these low yields, but they're not giving any kind of a real number. But it seems like what the fuel market does, the speculators then pick up on that and they run away with the commodity prices. And so once again, we're seeing escalating prices on the corn markets that nobody can really justify.
So David, you did tell me that.
In a supply field.
Sorry to interrupt. You did mention that you've had to raise prices for your customers. So I'm curious, I mean, your profit margins must be under so much pressure. Describe the compression and then how that's working out and how much percentage-wise you've had to raise prices generally.
Well, on our side of it, and the retail bakery of our size, approximately, if you look nationwide from our size, our average, our goal net margins at the end of the year is 1.5% to 2%. So there's no room there to play when you see market prices increase 2% and 3%. It's not there to absorb. And we've been in business for 53 years, and in the last 18 months, we've raised prices 3 times, and that's just unheard of in our 53 years. Twice this year already, and we're looking at it, and things sort of stabilize, but what happens in addition to that is if corn goes up, beans will follow and sugar will follow. It's just seems like when gold goes up, copper goes up. It's the same thing in the commodity market.
The demand for soybeans increases because corn has gotten so expensive.
That's exactly right.
So, you know, there are certain things that you just can't control, like the weather, and the corn crop was certainly impacted by Mother Nature, but there's also the ethanol story. So how should this all sort out? What is the best case scenario? We know the ethanol subsidies are drying up. Is that going to help you at all? I mean, do you see an end to this where prices will come down, stabilize, if you will?
Well, a lot of that depends on what USDA is going to do with all of the crop that they have in setback. You know, that was a big problem when ethanol went in and the demand on corn increased. USDA didn't release the setback fields so the farmer could produce more. All it did was raise the price up, and then government subsidized corn. Well, you know, that was great for the people putting it in the fuel tanks that were getting the subsidies if you were producing it. But us in the end, in the food business, all we had was we saw high prices that you end up paying.
Right. David, thank you for sharing your story with us. David MacArthur, and best of luck to you.
Thank you.
Brought to you by Patriots Helping Patriots.com. Some folks say you should have 2 types of investments these days, the kind you can eat and the kind you can shoot out of a rifle. When it comes to the eating kind, you can get 12 servings free. Learn more at PatriotsHelpingPatriots.com.